Happy New Year. I'm Beth Riebenstorf with the Rebe Homes team, and it is January 2021. The new data is in, and that means it's time for the January market update for 2021. So let's get started.
A big concern right now for everyone is, does recession automatically mean a housing crisis? The market itself is very different. We currently have a record low inventory with less than a 1 month supply in some areas like Arizona. We're definitely experiencing a seller's market and not even close to a buyer's market. Then there's the amount of equity. 58.7% of all homes have at least 60% equity. And as of the latest numbers, 38.2% of all homes are owned free and clear. Equity provides homeowners facing a financial challenge a number of options that simply were not present during the 2008 housing crisis. Then we take a look at the amount of home equity that was cashed out. Between 2005 and 2006, $824 billion was taken out, compared with only $247 billion between 2017 and 2018. And that brings us to price appreciation. If we compare the years between 2000 and 2005 and the buildup of prices, it's almost double to what we've experienced in the last 6 years. This is definitely something to keep an eye on. The numbers from CoreLogic show that home prices actually rose 7.3% in 2020. A look at the last 6 recessions show that 4 out of 6 times home prices appreciated during the recession. The average equity of a mortgage for a home has seen an improvement from third quarter last year of $177,000 up to $194,000. $17,000 is the average gain in equity on a mortgaged home. 38.2% of homes are owned free and clear in this country. 10.8% is the increase in equity totally. That's over $1 trillion since the third quarter. This chart shows average increased equity in each state. Arizona at $28,000, California at $34,000, and Washington at $36,000. Looking forward, the challenge for buyers remains inventory, limited inventory, and it's expected to continue for the first half of the year, which will keep upward pressure on home prices. The 2021 home price forecast is anywhere from 2 to 6%. 6% from the National Association of Realtors and Zelman, and Realtor.com at 5.7%. Fannie Mae and MBA, they're projecting around 2%. What's significant is there's no prediction of depreciation, only agreement that there will be appreciation, and it's a matter of how much. Looking forward, the most recent home price expectation survey shows us that over the next 5 years, the average $300,000 home, if purchased today, will, based on the projected appreciation, that homeowner stands to gain about $54,000 in appreciation over the next 5 years. Treasury rates have been moving up since the election, according to the Mortgage Bankers Association, but mortgage rates have kept going down. The federal government is pinning down mortgage rates by all the actions that they're taking in the secondary bond market. Mike Frantantoni, the chief economist with Mortgage Bankers Association, says, "We're going to start to see mortgage rates drift up with treasury rates as opposed to moving in the opposite direction." So the experts are saying mortgage rates are going to rise, although for now and sometime into the future, we're in a really good mortgage environment. Let's look at a $300,000 mortgage as an example with a 30-year fixed 2.7% rate. The principal and interest payment is $1,216.79. If we use the 2021 fourth quarter estimates according to Realtor.com of 5.7% appreciation and a 3.4% interest rate, a year from now, that $300,000 mortgage is now $317,100, and that increases the principal and interest payment to $1,406. That's a monthly payment difference of almost $200 per month. So what about our local Phoenix metro market? We'll look at the average price per square foot in the price range of under $300,000. We see an increase of 15.7%. That's from $146.91 to $169.97. For homes in the $300,000 to $600,000 range, it went from $175.34 a square foot to $195.93, for an increase of 11.7%. And for homes between $600,000 and $1 million, 2000 2019's average price per square foot of $223.57 increased 8.6% to $242.69, and homes over $1 million saw a 9% increase from $370.54 a square foot to $404.03. Total sales between 2019 and 2020 for all price ranges increased by 3,294 units, from 97,260 to 100,654. In the under $300,000 range, well, that had the biggest inventory challenge and saw a decrease of 9,693. So from 55,700 in 2019 to 46,007 for 2020. A big increase in the $300,000 to $600,000 range, from 33,812 to 43,672. In the $600,000 to $1 million range, well, that went from 5712 to 7599. And home sales over $1 million went from 2136 to 3384. So good news for appreciation and interest rates. While there are challenges for buyers in our low inventory market, as you can see, buyers are buying. If you or someone you know is in wait mode, please share this and send them our way. We excel at helping buyers get their offer accepted, even in multiple offer situations and even with contingent offers. Not sure what that is? Well, then definitely contact us so we can help you explore. And if you are renting, or if you know somebody who's renting and considering whether now's the time to get in the game, well, join us for our Rent versus Buy webinar on Tuesday, January 26th at 6 p.m. Details and a link to sign up are in the description below.
As always, we're here when you need us. I'm Beth Riebenstorf with the Reby Homes team, bringing you real estate beyond expectations. We'll talk with you next month.